Fed governor fired for mortgage fraud, the Lisa Cook scandal explained. Picture this, the Federal Reserve, the almighty gatekeeper of interest rates, the referee of inflation, the so-called adult in the economic room. Now imagine one of its top officials accused of mortgage fraud. Yes, that same Fed that decides whether your mortgage payment goes up or down is now making headlines for allegedly gaming the very system it's supposed to protect. This isn't just a scandal, it's a trust crisis. Let's cut through the noise. Who is Lisa Cook? Lisa Cook wasn't just another name on a government payroll. She was historic, the first black woman to ever sit on the Federal Reserve's Board of Governors. That appointment was packaged and sold as proof that the Fed wasn't just a room full of gray-haired men in suits anymore. She was meant to symbolize progress, diversity, modern thinking, and a connection to Main Street families struggling with inflation and mortgages. Her actual role? It's monumental. She was one of just a handful of people in America who help decide interest rates. The very rates that dictate how much you pay on a car loan, how expensive your credit card debt becomes, and whether your mortgage payment is something you can live with, or something that keeps you awake at night. Now here's the twist. The very person who helped decide your mortgage rate is being accused of breaking those same mortgage rules herself. That's the part that rattles people. It's not a story about some small town loan officer cutting corners. This is someone from the inner circle of America's central bank. When a Fed governor gets linked to mortgage fraud, it flips the narrative from guardian of stability to participant in the chaos. It's like putting a referee on the court and then realizing they're running a betting pool on the sidelines. Her appointment was originally framed as a milestone, proof that the Fed wasn't stuck in the past. But the scandal transforms that symbolism into something darker, a reminder that institutions love to celebrate appearances even while ignoring the cracks underneath. And for ordinary Americans, it feels personal. Imagine struggling to get approved for a home loan, mountains of paperwork, endless scrutiny, while someone at the very top may have been bending those same rules for personal gain. That's the gap between what's demanded of you and what's excused for them. That's the hypocrisy that stings. Because if the Fed's own leaders can't be trusted with mortgages, how do they expect the rest of us to trust their policies? The DOJ investigates mortgage fraud allegations. The Department of Justice opened an investigation into Lisa Cook for alleged mortgage fraud. We don't have every detail yet. The files are sealed, the charges are cloudy, but a scandal like this, the facts almost matter less than the optics, and the optics are brutal. Mortgage fraud isn't just a harmless paperwork mistake. It's the same poison that helped collapse the housing market in 2008. And now a Federal Reserve governor is under suspicion. Mortgage fraud takes many forms: fake pay stubs, exaggerated appraisals, even straw buyers used to move money around. These aren't small mistakes. They're deliberate ways to bend the system. And when someone's sitting on the Fed board, the body responsible for regulating financial stability, gets linked to that behavior, it's more than hypocrisy. It's a direct attack on the Fed's credibility. It's kind of like finding out that the Surgeon General runs a vape shop on the side. Technically possible, but devastating for trust. The real damage isn't about whether Cook is found guilty or cleared. In finance, confidence is currency. The public doesn't have to wait for verdicts, they react to perception. And once people believe the Fed is corrupt, markets start behaving as if it is. Rates tick higher, volatility grows, and the average American is left holding the bill for someone else's scandal. And that's exactly why Trump's administration moved fast. Not just to deal with Cook, but to send a message. The question is, was that message about justice or control? What are the specific allegations? Now, let's get into the heart of it. What exactly is Lisa Cook accused of? According to the DOJ probe, it comes down to her misrepresenting her mortgage applications in ways that gave her better terms than the average borrower would ever see. In plain English, she's accused of playing Monopoly with real houses, claiming more than one primary residence at the same time. Here are the details: Ann Arbor, Michigan, and Atlanta, Georgia. Cook allegedly declared both properties as her primary residence in 2021. That's not a technicality. It matters because lenders offer their best rates and lowest down payments to borrowers who live in the home themselves. And then there's the Cambridge, Massachusetts condo. This property was listed as a second home, but records suggest it was being rented out. If that were true, that's another red flag, since lenders consider rental properties riskier and usually require higher interest rates. It's like telling 3 different high schools you're the valedictorian at each one. Eventually, someone's gonna notice. Now, why does this matter? Because the gap between an owner-occupied loan and an investment loan isn't small. We're talking thousands of dollars in upfront costs and tens of thousands of dollars over the life of the loan. If she misrepresented occupancy, it wasn't just a box checked wrong, it was a financial advantage gained by deception. And here's where the outrage really builds. This is the Federal Reserve governor, someone who helped oversee rules designed to prevent exactly this type of abuse. So the DOJ isn't just asking, did Lisa Cook bend the rules? They're asking, how do you police the system when the police are the ones breaking it? The firing by Trump's administration. The investigation was barely public when President Trump's administration made its move. Lisa Cook was out. Officially, the firing was about misconduct and protecting the integrity of the Fed. Unofficially, it looked a whole lot like a power play. When the White House starts firing Fed governors, you have to ask this. Is this about cleaning up corruption or consolidating control? Trump framed the decision as decisive leadership, draining the swamp, holding elites accountable. And for his base, it landed. After all, mortgage fraud is easy to understand. It's not some abstract economic policy. People hear mortgage fraud and immediately think of 2008 foreclosures and neighbors losing their homes. But here's where the satire writes itself. The Federal Reserve is supposed to be independent, insulated from political theater. Firing a Fed governor turns it from a central bank into a reality show. It felt less like monetary policy and more like an episode of The Apprentice. Only this time, the boardroom was the Oval Office, and the stakes weren't who's launching a new product line, it was who controls the nation's money supply. The problem isn't just Cook's firing, it's the precedent it sets. If one president can remove Fed officials for alleged misconduct, what stops another president from simply doing it because they don't like the votes being cast on interest rates? Independence disappears. And once that's gone, markets don't see the Fed as a neutral referee anymore. They see it as just another political pawn. And that's exactly why Cook didn't go quietly. She decided to fight back, not with speeches or press conferences, but with a lawsuit that puts the entire Fed on trial. Cook's lawsuit fighting back. Lisa Cook didn't fade into the headlines. The day she was fired, the story could have ended. Instead, she doubled down. She filed a lawsuit against Trump's administration, accusing them of wrongful termination and political retaliation. This isn't just a courtroom drama, it's Act 2 of the same play. The Fed's credibility on trial, with Cook now cast as both the defendant and the accuser. Her case frames the firing not as justice, but as revenge. Cook argues she was targeted not for what she did, but for who she was, a Fed governor standing in the way of Trump's efforts to bend the central bank to his will. That's her storyline, not a fraudster, but a victim of political prosecution. Forget interest rates. The Fed's biggest debate right now is whether to argue before a judge or a jury. It's like the central bank swapped out spreadsheets for subpoenas. Instead of monetary policy, we're watching courtroom policy. Brought to you by Law & Order Financial Crimes Unit. The lawsuit guarantees this won't vanish quietly. Every filing, every subpoena, every leak drags the Fed's name through the mud for months and maybe even years. And here's the irony. Whether Cook wins or loses, the Fed loses. If she wins, the White House looks like it weaponized power. If she loses, it confirms the allegations. Either outcome corrodes public trust. And that trust, or lack of it, is the whole point. Because the Fed doesn't run on dollars or data alone. Its real power is built on credibility. And scandals like this burn right through it, and fast. The bigger picture. Fed independence under fire. Up to now, this has looked like a personal scandal. One Fed governor under investigation. One lawsuit in the headlines. But step back and you see the bigger problem. The Fed itself is caught in the storm. Because when politicians can fire central bankers and central bankers are accused of playing the same mortgage games as Wall Street, the line in between independence and interference doesn't just blur, it vanishes. Markets run on signals, and the Federal Reserve's signal has always been, we're neutral, we're credible. We call the shots based on data, not on politics. That's what makes investors trust the dollar. But with Cook's firing, the lawsuit, and the public political brawls over the Fed, that signal is cracking. Here's the danger. History is full of examples of what happens when central bankers lose independence. Turkey's president overruled his central bank, and the lira collapsed. Argentina politicized its monetary policy, and inflation soared past 100%. Even Weimar Germany showed us how quickly confidence can spiral when politics choke monetary policy. The Fed was supposed to be the referee of the financial system. Now it looks less like a referee and more like a piñata. Everybody with a stick is taking a swing. And this is bigger than one scandal. Once independence is gone, every decision the Fed makes becomes suspect. Did they cut rates again to fight inflation or please the president? Did they raise rates for the economy or for politics? It doesn't matter what the truth is. Once people believe the Fed is compromised, markets behave as if it is. And when confidence in the Fed cracks, it's not governors or presidents who pay the price. It's people trying to buy a home or borrow for their future. Impact on consumers, housing, and markets. It's tempting to watch this saga and think, that's Washington's mess. It doesn't touch me. But when the Fed stumbles, the effects spill straight into the lives of ordinary Americans. Every scandal at the top eventually shows up as a bill at the bottom. Here's how it hits. Borrowing gets pricier. Banks and lenders add a risk premium when they smell instability. Remember the adverse refinance fee that Fannie Mae and Freddie Mac added during COVID? It happened. And this is real. That means higher mortgage rates, costlier car loans, and credit cards that punish you even harder. Housing loses its footing. Buyers hesitate, sellers lower expectations, and the fragile housing ladder shakes. For families already struggling to afford a first home, this is another kick down the rung. Markets even jitter. Retirement accounts and investments ride the storm too. Every policy move looks political, and that uncertainty whipsaws portfolios. So while Fed governors are busy hiring defense attorneys, home buyers are wondering if they'll need one just to close on a house. Picture a couple in Denver, Colorado, stretching their budget to qualify for a starter home. Rates edge up just a fraction because of lost confidence in the Fed, and suddenly the math doesn't work. That's what we're talking about here. They're locked out. That's how fast the scandal at the top can shut the door of opportunity below. This isn't about Cook or Trump anymore. It's about the ripple effect. Because when credibility cracks in Washington, it's families on Main Street who feel the quake. And if the Fed's credibility is currency, the question now is, how close are they to bankruptcy? The Lisa Cook scandal isn't just about one Fed governor. It's about trust, the only real currency the Federal Reserve has. And right now, that trust is being spent faster than it can be earned. When the people setting mortgage rates are accused of playing games with their own, how can the public believe the system is fair? I'd love to hear what you think. Is this a case of justice finally being served, or just another round of political theater? Drop your thoughts in the comments. I read them all, and your perspective helps shape where we take these conversations. If you found value in this breakdown, please consider subscribing. Our goal is to get 100,000 subscribers on this channel and turn it into a community of people who can cut through the noise, challenge the narratives, and take control of their financial future. And we'd be honored to have you join us. And if you know someone who'd get fired up about this story, share this video with them. Because the more people understand what's really happening behind the headlines, the harder it is for the elites to get away with it. Thanks for watching. Thanks for supporting American Money 101. And until next time, God bless.